So it's sinking in. We could get these higher for longer interest rates, and it does raise the prospect of a whole bunch of Canadians looking at massive jumps in their home borrowing costs as their mortgages mature or the terms end. We're joined now by Jimmy Jean, VP and Chief Economist at Desjardins. He says Canada should introduce mortgages with longer terms. He believes it could help contain these payment shocks when people have to renew. Thanks very much for coming on the show.
Thanks for having me.
I know that the terminology can get a bit confusing here, but you're not talking about the amortization of a mortgage. You're simply talking about the term here, whereby you renew it, be it variable or fixed term.
Absolutely. And not all countries have terms. Here in Canada, we have terms. What we're talking about, yes, the timing at which one needs to renegotiate and specifically the interest rate component of their mortgages.
So we have this odd situation, don't we, in America? People take out 30-year mortgages. The interest rate's fixed for 30 years. I don't think you're advocating necessarily going to that, but you do think, for example, 10-year terms would be a good idea.
Absolutely. So what our analysis shows is that if a 10-year mortgage term was more prevalent in Canada, because it does exist, it's only 2% of issuance, so it's very rare, but it exists. But if it was more prevalent and at a reasonable cost, well, the payment shocks at renewal would be much more manageable. And that's for two reasons, basically. The first is that households would build more equity, and therefore any given interest rate shock would apply to a lower balance. So that diminishes the size of the adjustment. And then secondly, households would see their incomes rise more over a 10-year period. If you think about the three-year cohort renewing today, for example, real income growth has been about stagnant since 2021, in part because of inflation. But if they had locked in till 2031, let's say, that would allow incomes to catch up and make the renewal much more manageable for the borrower.
One problem here, apparently, with 10-year mortgages is that it would be costly for the banks if people were to prepay during that long period, because they'd be giving up months and years of interest payments. So what change might be needed there?
Absolutely. And you have that problem elsewhere as well, in the US and in France, where they can have 30-year mortgages with no renewal. But the prepayment risk is still there, but it's being managed. What happens here in Canada is that we have dated legislation around prepayment fees that makes it very hard for lenders to offer 10-year mortgages at rates that are going to be attractive versus what they can offer at shorter term maturities. So revisiting that legislation, the Interest Act, which dates back to the 19th century, would be a first thing to do. And then the second element that's preventing more prevalence of 10-year mortgage options is that our secondary market is dominated by programs run by the CMHC, and that can only package insured mortgages. Insured mortgages, more and more, they're becoming a minority of mortgage issuance because there's so many constraints around them. So there needs to be another secondary market ran by the private sector that can allow for the pooling of uninsured mortgages. And when you look at the US and France, where you have long mortgage terms, they have deep and efficient securitization systems that lenders can not only use to finance mortgage issuance, but also to manage that prepayment risk.
And okay, so yeah, I'm looking here. It's interesting, more and more uninsured mortgages out there. If I was looking at, say, from a bank's point of view, giving a consumer a 10-year term or a 5-year term, would they have to charge a lot more for the 10-year term? It would depend on bond yields, I suppose.
Exactly, and it would depend on whether they would have an option to package them and finance themselves in the financial markets. If I think Canadian, there would be a lot of investors interested in the Canadian mortgage product and securitized products just because of the quality of the underlying portfolio by Canadian banks. But Canadian banks are known for being very diligent issuers. And if you had a market that had the derivatives products, the depth that you find in other countries, they could be offering those rates, those mortgages at more competitive rates. And sooner or later, competitive forces would align to make it such that by way of prepayment penalties or of things of the like, the market, the option would be attractive. So, I mean, we have 7-year mortgages, so this exists as well. So it's just a matter of making some changes in legislation, in developing a market. And, the Bank of Canada has been very vocal about this 5 years ago under its previous governor, Stephen Poles. But of course, came the pandemic and other priorities. So I think right now is really the time to advance that agenda.